Today, it's Edwin's Monday evening property rant. Hello again, it's Martin North from Digital Finance Analytics, welcome to this post covering finance and property news with a distinctively Australian flavour. And it's Monday, and therefore it's the official Edwin rant. Hi Edwin.
G'day Martin and all our followers out there, our Twitterers, our Kryptonians, WeeChat Chatters and everybody else that dares to watch our Monday rants.
Absolutely. Greetings to one and all. And you've got a new tree of life sprouting out of your head.
Oh, it is. It's all that life and exuberance that just oozes out of me, Martin. It's just manifested behind me. I haven't hung it up properly yet, so it looks like I've got a perm of some sort.
Yeah, I was going to say, it looks like you've been out in a gale and your hair's gone all over the place. No, very, very good.
Well, that's the nature of the economic climate and the current climate, isn't it? It's the sun comes out, then it starts thundering and and it's cloudy, it's raining and windy, all sorts of things up here in the mountains. I mean, I've had to put the Dustin Evans sardine pond. I keep on telling them it's sardines, Martin. We eat sardines. Yeah, they don't know it's core yet. But we keep on telling them sardines, otherwise they don't help out. Yeah, that's on hold. Can't do anything. So at least it's given time for my hands to heal from the line burns.
Yeah, quite good timing then. But certainly we've had a lot of rain over the last few days, particularly up there as well as down here too. And we won't mention the sardines, okay?
Yeah, look, but the weather itself, it's almost a reflection of what the economic turbulence is out there, and a lot of the things that we said more, and we expanded on a little bit more on towards the last quarter of 2021 are all coming to pass, Martin. People are finding it harder and harder to get things. Things are going to be harder and harder to get from point A to point B. So it's really a wait and see. I think we're not getting the mainstream media reporting on a lot of this because obviously there's a lot of people still on holidays and people aren't complaining and whinging thus far. But there's a lot of economic turbulence, and I feel that there could also be a lot of property turbulence. It's just going to be moving of the goalposts, the wait and see, watch and see. It's a mishmash of all sorts of things moving forward, but hopefully we can keep our viewers informed on a week by week basis with our rants.
Absolutely. Well, we were saying the end of last year that supply chain issues would continue to get worse, and of course we're seeing that in all the supermarkets at the moment with lots of shelves. Eggs particularly troublesome at the moment, evidently. So maybe you should get a few roosters.
Yeah, just look. Once you use up your eggs, just go to the backyard and bury the shells. You might get an egg tree. Just there's a
well, that's an idea.
The thought. I mean, science. We just got to follow the science. That's all I can say. Just follow the science, Martin.
Yeah. What's the old question? Chickens and eggs. Which comes first? The answer is an egg tree.
That's right. We follow the science with everything else. But look, in all this, I think we just have to keep in mind that moving forward, we continue to be focused on what we can control, and don't wait for the rest of the world to do what we think that they're going to do. We just got to keep on moving forward, and again, that's what we're going to be reporting on a week-to-week basis, and empower our followers to see what's coming up, what's around the corner, and you just be prepared. Because it is going to be a very, very turbulent 2022. And I think this turbulence is going to continue until the first half, all the way through the first half of the year, because by all means, in terms of the health-wise or what the government's doing in terms of their health policies and mandates and everything else, I mean, it just seems like they don't know what they're doing. And unfortunately, that fear and intrepidation and everything and all the emotion that goes along with it, it just gets translated and juxtaposed with the property arena, and people are going to make silly decisions on the way in or silly decisions on the way out, whichever side of the fence you're standing on.
Yeah, well, it's interesting. I've had a few people tell me that they've stopped looking at property now because of the concerns about COVID, and of course some agents are disappearing because they've got they got the bug, or they might have got the bug, or they're worried about getting the bug. So in fact, the the active momentum in the property market has definitely fallen away, and it's probably something which more broadly is a concern. I was talking to somebody who was up going on Darling Harbour today, and they said it was like a very, very quiet Sunday afternoon. There's nobody out there.
Well, that's right. It's amazing. Like today, I was able to get to only a couple of meetings. A couple others got cancelled. One of the agencies that we were supposed to be talking to is in hospital, unfortunately, and hope she gets better and recovers. But at the end of the day, it's one of those things that you don't know who's going to be taken out at what time and in which day. So things are going to be chopping and changing. Again, it goes back to what we were saying late last year, that it's going to be a very turbulent 2022. And if people thought 2021 was going to be harsh, 2022, we've been saying from the beginning of our conversations of our rants in early 2021, we said that this is where what was going to happen, and this is only just the beginning. We're only just starting to enter the thick of it. But it's even China, but even the WeeChat Chatters are not feeling that confident about their outlook with the economy in China, and it's already a reflection in the stamps that they've put out.
Yeah, that's right. Tigers, but thin tigers, right?
Yeah, thin tigers, somewhat anorexic tigers, from what the commentators are saying there in China and the economists. Those images of the two images of the stamps that have been issued for the celebration of the year of the tiger, they're basically saying, look, the tigers are looking melancholic and somewhat anorexic, and they're not very good images moving forward. But that is what the Chinese population and in all the industries are more or less expecting not a very good year. And that the interesting thing for us is, how is that going to reflect on our economy, and more to the point, because of Monday Night Rants, how is that going to reflect on our property market?
Yeah, well, it's very interesting. When I did a post yesterday, I went through the latest RBA chart pack, which is loads and loads of charts from all over the place. And there were some really interesting ones showing just how much the economy in China had slowed, and that was true from the property sector right the way through. But also, the other chart that threw me a little bit was just how much of our economy is linked to Chinese exports and imports. In other words, our economy is absolutely in lockstep, in fact higher than previously, with what's happening in China. So if China is slowing, as it does seem to be, that is not good for our economy. And I think that we should sort of stand back and just think about that, because like it or not, the deadly embrace between Australia and China is probably more extreme than previously.
I think so, and this is what we've been saying. Again, we've been saying when we started first talking about the supply chain issues, and with the simple fact that most of our base products come from China. We've been saying that although we grow, we graze, we herd, we breed all sorts of different animals, fish, and everything else and we farm fish and everything else, in other produce to sustain us. At the end of the day, we get our base materials from China, and we get the packaging materials from China, and the base materials to make the packaging. So it's just so convoluted, and it will have a major effect, and will continue to have a major effect on how things evolve. One of the points that are being highlighted in the commentary with the economists and the commentators there in China has been that one of the observations, again, which is pertinent to our rant of Monday nights, is this fact that they are already seeing evidence of local Chinese. This is evidence there in China of the local Chinese, the middle class that predominantly invested in overseas markets such as Canada, New Zealand, and Australia, buying off the plan apartments, which is the middle class, mainly, and they're already saying that they're already selling their assets and calling the money back to China because of the economic stress that the middle class there in China are facing. Multiply what we see locally by 100, if not by thousands, and you get the extent of what's happening there. Hence the reason why it's a melancholic tiger, it's an anorexic tiger that's been reflected on those stamps. So what are we going to see moving forward with regards to our property market here is predominantly, from what they're saying, is we potentially are going on a collision course with a huge dump and sale of apartments that have been bought off the plan. And let's not forget that the majority of the people from China, from the overseas investors that bought into the apartment market in Sydney and Melbourne and in parts of Brisbane as well, they were in the middle class, and this is the class that is suffering over there. The upper class, the top tier, punters in property, they were mainly focusing on the industrial, commercial, and purchasing of lands or high net worth properties along the foreshores of the harbour. So that's one of the things that our WeeChat Chatters are telling us thus far.
Yeah, absolutely. And it's just worth underscoring, Edwin, that the apartment market in some areas of Sydney, Melbourne, and indeed Brisbane were very, very much buoyed by that middle class Chinese buyer, right? A lot of people bought off the plans. Interestingly, I'm getting lots of stories of them not completing. So in other words, they might have put the 10% deposit down or whatever it was, but when it comes to actually completing the apartment and completing the sale, they've just disappeared. And, whether that's official or unofficial routes to solve their problem, it does seem to be happening.
Well, I spoke to a conveyancer that's at the moment handling 2 projects in Sydney, each on or about 150 apartments. The majority are being sold off the plan. And I was saying to her, Karen, look, one of the things that you got to understand is one of the things is that one thing is buying, another thing is settling. Two worlds apart. And this is the one of the issues that many conveyancers, solicitors, developers, and builders, as you said, Martin, are going to be facing moving forward, and that's across the board, not only with apartments but also from the local perspective and the local market. How many projects are going to be held, and how long are they going to be held for because they're unable to complete and unable to get occupation certificates? One thing is getting an interim occupation certificate on a house and land package, because there's only minor works to be completed, and you can basically plead your case and move in with an interim occupation to do it. But when you still don't have walls, when you still don't have kitchens or utensils or things that are major aspects of a lifestyle, well, you're going to have more of these anomalies, not anomalies, but you're going to have more of these issues throughout all of Australia with all these jobs that started a year, 12 months, 18 months ago, and are they going to complete? So, look, it's obviously it is going to put a lot of pressure on these projects, those that have started, those that are halfway, 3/4 through, and I also take a very, very cautious approach to anybody that's looking or that's asking us to look for a knockdown and rebuild, or even a subdivision side of things, as the principal place of residence, as a first time home buyer. There are people that can can hold for a while, but the majority of the people that are going to be affected with a lot of these uncompleted constructions are not only the investors from overseas, but also the first time home buyers that have put all in, and they've got very high LVRs. I see that across the board in many different aspects of the market. They're the ones that are basically being railroaded, affected, hitting brick walls, and coming under all sorts of issues.
Yeah, that's right. And the valuations are also sliding as well. I was talking to somebody today, in fact, who's had contracted to go ahead at a certain valuation level. They've got a sort of a preliminary approval. They went back to try and talk to their lender, and the lender's basically got an updated valuation, which is 15% lower than where they were starting from. And so suddenly they've got this massive question mark as to whether in fact they're able to take this transaction through to completion or not, because they can't get the financing as expected, and they've got this big gap. And so the question is, do they rush around and try and put it on credit cards? Do they rush around and try and find another lender, or do they basically give up on their deposit and just walk away? I mean, that conversation, if it happens in a few different locations, could really put the cat among the pigeons.
Yeah, well, that's right, and I think look, the values are definitely are going to be looking very, very carefully as to what how things evolve with the apartment market or the strata complexes. In terms of housing, I think there's also a little bit of caution that the values are going to be taking moving forward. Because at the end of the day, let's not forget that they don't get a lot of money from the banks in order to do a valuation, but yet they're holding the bag, with millions of dollars in terms of public liability insurance. If they're called to give an account as to why they gave it a certain value and it's dropped over a period of 6 months, but again, it's going to be the caution is going to be felt or seen or more evident with the individuals that are looking at the higher LVRs, and the majority of the individuals that are looking at the higher LVRs are the first-time home buyers, unfortunately, that are looking to come into the market. The locals, the overseas buyers with PR visa holders that are coming in, and or returning expats, as I said before in the previous rant. They're coming in, on average, they're only borrowing 50%. So, often you see the valuations come in on a contract price. There's not a lot to be said, because as much as people think that valuers are really independent of the banks, they're not. Let's make it very clear that they are not. In theory, they are a third party. They may be seen as independent, but they're not, because at the end of the day, how much independence is there if the banks are paying them for the valuation to secure the money that they're lending out. So, and this is where a lot of people don't seem to understand. And the mandates that the banks give to the valuers. I mean, I've been in the industry for a very, very long time, and I haven't heard anything different in different phases of different markets over the 25 years that I've been in the industry. And that is that they get very, very clear instructions, and one of them. One of the many instructions is they look at they are privy to the borrowing capacity of the individual that's making the application. So it's you got to throw a lot of caution to the wind this time around, and hopefully people are going to be more conscious of how they move forward and where. And where they place all their money, because particularly if it's your first property that you're going to be buying in this market.
Well, that's right. And just two quick things to underscore. The first is that the whole concept of an independent valuation, when the bank asks for it, is as you say, a complete furphy. And I've seen a number of bank mandates, in other words, general instructions that they provide to their valuers at different points in the cycle, right? And so there is a very much a feedback loop between what the bank is looking for and what the valuer is doing. And you're right, also, of course, the valuer has ultimate liability based on the advice that they provide. Although, if you look at the small print, they try to walk away from it every time. The other interesting point, Edwin, going back to China, there was an expectation, I think, that there would be an influx of Chinese students coming back now. And with the latest evolution of COVID and everything else that's going on, I'm not sure that's happening. And I'm talking to a number of people who've still got these inner city high-rise apartments that would have been taken by Chinese students, and they're still vacant. They still can't get anybody to take them. So it looks to me as though that's another break on demand.
Definitely, and that is the second point that our WeeChat Chatter has been telling us over the weekend, as to don't expect this feed, this highway that we had, in previous years of that the amount of people coming into Sydney, into the and basically absorb all the rental vacancies in and around the campuses, the tertiary educations that were in the private colleges that were providing these support to the influx of of these overseas students. So they're basically saying that pretty much you can cut that down by by most. I'm not saying they won't all come, but the numbers are certainly not going to be there. But it's one of those pressures. What I have been hearing by one of our followers, and Martin, is in his block, he's noticed in a complex of about three or four medium-sized towers in the North Shore. There's in his block, which is a block of about 41, there's 6 apartments that have been vacant, and what he seems to think is that they're being prepared not for a re-rental scenario, but for a resale scenario, because they've been vacant for a very long time, and they're not typically when an apartment gets prepared for a re-rental, the period or the preparation period is a lot smaller, a lot shorter. And because you want a quicker turnaround, and tenants aren't as necessarily as fussy as what property buyers would be, or you're not trying to maximise the value of the property as much by way of sale as you do, by way of a rental as you do a sale. So, but he seems to think that there's going to be 6 in his block of 3 or 4 complex, but in his block, 6 apartments that are getting ready to go to market. So the stories that I'm hearing, albeit third party, albeit just conversations that I'm having with our clients, with our followers, with our friends and our contacts, it is pointing to what the commentators in China are saying, and the economists in China are saying, that the future for a huge migration of students leaving China to take place, or take vacancies over in overseas, in places like Sydney, are long gone. They're not there. And besides, why would you want to come to Australia, Martin? Why would you want to come to Sydney when Canada's offering a $40,000 MBA with and you don't even have to attend? You can get it within 6 months. Isn't it a better deal to go to Canada?
Well, it does look as though Canada's really making a bid for those overseas students, and certainly the value proposition, all that money up front, and all of the other things wrapped around it. It looks pretty attractive, doesn't it?
Well, look, you don't have to go. You don't have to attend. When you read the article in its entirety, it's rather bizarre, rather interesting, to the point where you more or less they're more or less saying that you could even submit plagiarized material for your coursework. I mean, it's just farcical. It's really, really. But then again, it's you got to ask yourself the question: if Canada's doing it and other countries are doing this, it's not only us that are hemorrhaging, or our tertiary institutions that are hemorrhaging, and how much are they really hemorrhaging? Which is really transforming the landscape of the apartment market here in Sydney, and what's going to be moving forward. So, having said all that, I sit very much on I'm taking what the commentators in China are saying, and the fact that they are already noticing money coming back in. They've got their sources to know that the trend is already happening, where people there are basically telling their the agents in overseas nations to sell and send the money back home. But then again, why wouldn't you when you're in a position of losing your business there, losing your principal place, or potentially losing your business, potentially losing your principal place of residence, or you may have already lost your business, you may have already lost your principal place of residence, and you need that money in order to survive, to stave off, a very anorexic, very melancholic 2022, and they can see that the economy is not going to get any better over 2022.
No, absolutely. Well, of course, if you read the press today, they're all celebrating the acceleration and building approvals in Australia in November, right? But if you look closely, right, it was a very minor uptick, particularly in the high-rise sector, but the high-rise numbers are all over the place anyway, up and down. So they're really making a mountain out of a molehill. I think there's a bit of desperation now in the local press here with regard to the property sector, because everywhere you look, the signs are actually turning negative, and the more they turn negative, the more they want to spruik any piece of positive news at all they can.
Well, yeah, and it'll be interesting to see if this news that we've just shared with our viewers, if this is going to make mainstream media coverage here in Australia, because it's obviously not very good. So we've got the articles, we've got the actual articles from China to prove what I'm saying. So it's there. It is a fact. Just a quick question for you, Martin. Now, a few weeks back, when I went to the Jules Memorial there across the road, there those blocks that you were talking about that were for sale. What was the asking price that you?
About 1.3 million. Per plot.
Right, 1.3 million. I thought that was
for about 600 squares.
Yeah, and that's what I said. But now I saw that block when I went and the first time I saw that block was about 3 years ago. So when I went and did the one of our first live chats on there at your studio, and they've done a hell of a lot of backfilling there in order to get it to the way it is now to present it. So they've done a lot of works there, but noticeably, I didn't take a photo. I should have taken a photo, and this is in relation to what we were talking about. I mean, the numbers of construction proposals moving, ticking upwards, and all this and all that. One thing is asking for something to be built. Another thing is actually completing. Now, from when I looked at those blocks at 1.4 million. And the construction on that is going to be twice as much as in a flat block at the bottom of that street. And this is what a lot of people don't get and don't understand.
Yeah. So there's some very interesting, I mean, without going into too much detail, we know that there are underground streams. We know that they've had to build up a number of the blocks to quite a substantial level to make them relatively flat. But I was talking to someone the other day who's been looking at buying one of them, and then they figured that they would have to actually do quite deep piling to be able to go down and hit firm rock below, because the whole of this area is sort of on the slide. It's it's relatively unstable, and the costs that they did, back of envelope costs for laying foundations, were about 4 times what they thought they were going to be, and then when you actually add the cost of building, it's uneconomic, and it'll be interesting to see just how many of the plots ultimately do get sold at this sort of price, because there's a lot of work that'll be required to enable those to be converted into reasonably nice locations, reasonably good views, but the construction costs huge, absolutely huge, and I'm not sure that people are factoring in some of those hidden costs.
No, and I looked at another site over the weekend that the old flower power site over at Moorebank along the river there, and just the engineering works in the backfilling of that, and having to raise that, because obviously that's a flood zone, and having to raise that, I just said to the fellow that I was with, I just said, this is just reminiscent of what's going to happen, of what happened over in Jordan Springs and in the areas there where they've now got sinkholes and driveways, caving in, and also entire slabs just literally coming off their footings and cracking in half. And we're going to see a lot more of that. And so all I'm referencing here is the fact that we just got to be careful with regards to construction costs. One of the things is buying off the plan with apartments and actually settling with regards to funding and valuations. But with house and land packages, it's going to be the cost of construction, whether or not people are going to be able to afford the ongoing costs and the variations that no doubt the contractors, the builders are going to have in the contracts, and you're going to be subject to the rises of costs of materials, because they're certainly going to be covering their ass, because they've already been once bitten, twice shy. So they're not going to fall into that trap again moving forward. And with the supply chain issues that we're facing with regards to 22, I'm calling stay away, well away from building something big, and also take heed of anything that, if you're going to be buying a renovator's delight, be very cautious and be very careful as to what can be done in a timely manner without getting caught out. There are some things that you can still get away with and can do it very cost effective and timely, but you certainly just don't want to do major works with all these issues that we're facing as we're talking, from what our WeeChat Chatters are telling us, with ongoing issues. And let's not forget that a lot of industries, a lot of manufacturers are pretty much on holidays in a season that they should be going hell for leather between the beginning of the year to the 1st of February, when it's their calendar year. They would have been going hell for leather, but in actual fact, people have got extended holidays of up to 50 days, where they would have otherwise have only gotten the New Year's, the Western New Year's Day celebration, and that's it, and back to work, because that is a time where they make a lot of money. But this time around, it's absolutely everybody's very, very down in the dumps, because nothing's really happening. So that's the extent of it, and so we're going to feel a lot more of what China is feeling. So China is sneezing, Martin, and we're catching the Cron, or the Omicron.
Absolutely. Well, the numbers of listings look to be quite slow at the moment, as we discussed the other day in that emergency rant. We may have to change our view as to what's likely to play out, because if in fact less people list, and if less people are buying, that's going to have a completely different dynamic in terms of price movements ahead, isn't it?
Look, definitely. But again, we've got to be very careful, and our viewers have also got to be understand. Not so much we've got to be very careful, but our viewers have got to understand that we're looking at a two-lane market here that we're focusing on in 2022, and that's looking at the apartment numbers very closely and what's happening with those. We didn't pay a lot of attention, or as much attention that we're going to be paying in 2022 with apartments, because obviously it's not just the nature of our discussions and conversations. But this time around, it's going to be very interesting, because that's going to have chain reactions and snowball effects on other property markets as well. In particular, central areas, commercial hubs. So we've got the influence of the commercial property and what's happening there, and the lulls that the commercial and have experienced. We've got now on top of that, you've got these high-rise developments that are pretty much the dual occupancy or dual function. You've got commercial units underneath, and you've got retail commercial underneath, and you've got residential up the top. So you're going to have a lot of vacancy. So it's not going to be a very good look. And if you're going to have a dump of from overseas investors of this, so the commercial centres are going to be bleak, and that is going to have in part some effect on the freestanding homes nearby. How much of an impact? It's going to be negligible, I feel, because at the end of the day, people are still gravitating towards the home listings, and the home listings, the freestanding home listings. When I say freestanding home listings, I'm also talking about terraces and duplexes. because they still give you that space, they still give you that lifestyle that people have been looking for over the last 2 years. So unless there's a lot more of them coming on market, again, that's going to put a lot of pressure. And I think, as we said in the previous rant, in the emergency rant that we did, unfortunately, the first-time buyers are going to be, going to have to look further afield, and are going to have to either look for something smaller or much further afield in order to afford what their borrowing capacity will allow them to buy. So the numbers right now, they're still slow. It's still early days in the year and we're pretty much on par with the numbers that were published same time last year, Martin. But however, a lot of the property experts were expecting higher numbers to come on market. And I mean, in a way, I was expecting a lot higher numbers to come on market as well, middle of January towards the end of January. But what's changed that that train of thought is really the fear. And as you said, as you coined the term, that psychological lockdown, that we started being fed, pretty much from just before Christmas till now. But it's happening before our eyes, and it's how people are going to be interpret this fear that's going to determine how the numbers are going to be on market. I'm hearing a 50-50 call. Some people are telling me that they're talking to their investors, to their vendors, and they're looking at going on market ASAP. Others are telling me, and I've already experienced it. As I said, we've already experienced cancellations of inspections due to not only people, the owners of the properties being fearful, but also the simple fact that it's the real nature of it is that agents are catching the cron, and they're isolating. So it's one of those wait and see, watch and see very carefully as to how these numbers are going to be moving forward. The sale by underquoting, as I call it, the sale by auction is, I think, is going to be a reflection of the vendor sentiment, and we'll keep an eye on those as well to see how quickly they climb. We got to some huge numbers sale by underquoting last year, as we spoke about, Martin.
Yeah, absolutely. And the auction situation will definitely give us a very strong flavour as to what sellers' confidence levels are, and if people are less certain, then they probably won't go to auction. And I'm certainly hearing a number of stories of people being approached prior to the auction to try and do a deal, right? And that's another sign, I think, of relative weakness. But I guess, Edwin, if you think about it, and we touch on this idea of the unofficial lockdowns, the psychological lockdowns that are definitely happening now. Businesses are not able to trade. People are not travelling around as much. The tourism sector's, going off the boil. More airlines are now cancelling more flights. The trains here in New South Wales, they've just skinned back the number that they're actually running. I mean, all of these, without direct government intervention, sounds to me and feels to me like another lockdown. And so we could well have the same sort of economic outcome as we had a few months ago. And if that's the case, then all bets are off in terms of how this is going to impact the economy, but also how it's going to impact the housing market. But of course, not everybody is equally impacted, right? No. So there are some winners and there are some losers.
Well, that's right. And last year, when we were walking into it last year, at this time last year, there was still somewhat a fair amount of government support, and it was controlled. I think this time around, Martin, there's a lot more fear. There is a lot more fear, and fear because we're talking, in certain cities, upwards of 40,000 daily infections. So people are very fearful, and it's this whole fear that the mainstream, the government, and the pharmaceutical companies have created, that is really going to be counterproductive to the economy growing or changing for the better. I feel that's just my opinion. But yes, there's definitely winners and losers with regards to what's happening now. The winners, I note down the winners, and you could add or rebut my winners, Martin. But I note down 4 winners. Public servants, I feel that they're winners because they can take as much time off as they will, because the public servants, it's very, very difficult to get rid of public servants and politicians, all in the one category. People working for big corporations, there's a lot more flexibility with allowing workers to have more time off, leave without pay, leave without with minimal pay or whatever. There's a lot more flexibility with big corporations. Big business is definitely a winner because the small business, the small SMEs fall into the losers category in my books, and obviously big business capitalize on that because then they're cornering the market with with all the goods and services, and of course in regards and in relation to our Monday night rants, I believe that the winners are going to be also homeowners that are selling if the numbers don't, and my caveat is if the numbers don't click up a lot stronger than what they did last year. This is for freestanding homes. Apartments that are a different story. So they're my winners, Martin. So do you want to rebut any of those or add to any of those?
No, I think that's right. And I'd make one other point, and that is that big businesses and politicians and governments are actually very much on the same page. Remember, the JobKeeper program the first time around, how many billion went to big business that didn't need it, right?
Yeah.
There's a very strong correlation between companies, big companies in particular, and their ability to lobby the politicians and to grab money out of the till, as it were, out of taxpayers, to be able to support their businesses through this. Those are not facilities which are available to your typical small business or to your typical household, right? So they're on the losing side of the balance sheet. So politicians tick on the upside, big business tick on the upside, the people in big corporations, as you say, they've got more wriggle room, right? And you can work at home and all those sorts of things. Again, if you're a small business, you can't work at home. You've got to go and do what you have to do. So this really is creating a complete two-speed story. There are, unfortunately, though, some big losers too, aren't there?
Well, look, then my 4 big losers are self-employed, people that are self-employed, people that are self-employed, and typically the Aussie mantra when you got the flu or you got the cold was just get some flu tablets and you soldiered on. You moved on. I mean, pre 3 years, going back 3 years, I distinctively recall the amount of time that even although I was running my own office as well in property management and sales 4 years ago. Up to 4 years ago, before I did the transition to acting as a buyer's agent, I'd go to whether I had the flu, whether I was falling over, whether it was feverish, whether it was what I still went to. I was pretty much first in the office and last to leave, and we soldiered on. And that's the nature. That's the Aussie. That was the Aussie mentality. But now you even if you wanted to. You can't really soldier on, because if you're sniffing and coughing and spluttering, well, you're going to be looked upon if you don't get a punch in the nose at the same time. And obviously people are going to be very, very hesitant for you to come and do work at your principal place of residence or your place or if it's investment property, the tenants are going to be very cautious. So there's a lot of issues. There's a lot of red tape that now self-employed people, particularly in the trades, are going to have to be jumping over all these hurdles and obstacles. So they're losers in my view. Workers with limited sick leave, or they're in positions in organisations that are not in high management positions. They're also the big losers, because once you take up your sick leave, if you feel, let's not forget the speak from our our CHOs and other O's in power, basically telling us to, or telling the people to stay at home. If you've got signs, you don't necessarily have to have the cron. Is if you feel you've got signs, stay at home. But then, yeah, there goes your sick leave, and there goes your potentially your leap, because the SMEs, which are my third category, are the big losers. They can't afford to keep staff on, or they can't afford to give them that wriggle room, as you say, as like the big organizations can. And you look at the retail sector, the retail, and also the hospitality, small restaurants, takeaways, and that type of hospitality and retail. They're going to be absolutely crushed. So it's only going to be the bigger boys, the bigger players, that are going to be surviving this with the staff, because it's not a matter of not being able to, it's a matter of being able to staff it in order to comply with every other mandate about the place. So it's just more red tape that's added onto the SMEs. And the last in my fourth category for the biggest losers are the new first-time home buyers, and I'm talking about the locals, not the PR visa holders that are coming in with with a lot of money because they've sold overseas and they're coming. That's a different category altogether. So I'm talking about the new first-time home buyers here, because they're still relying on very high LVRs, and if they're looking particularly at freestanding homes, they're going to be, if numbers don't come on market, as we spoke earlier, they're only just going to again, just watch and see how the market is really running away from them in the ideal space. Obviously, there'll be a compromise that they will have to make, and the compromise is going to get bigger and bigger, and further and further away from where they really want to live, and they're going to have to make more sacrifices in order to enter the market, which is the unfortunate thing. They're my losers.
Well, I'll add just one more to your list, Edwin, and that is those people with fragmented employment and part-time employment in particular, because quite often they have to go to multiple locations, and if they don't turn up, they don't get paid. So, they're on peacetime or 0 hours contracts and those sorts of things. And unfortunately, there are demographic areas and types where there are lots and lots of people in this category. And so that is going to put significant financial pressure into particular geographic locations. And in fact, there's a high correlation between mortgage stress, for example, which I'll be talking about on my live show tomorrow, and some of these types of work. So if you're in a full-time employed situation, with good health cover and everything else, that's one scenario. But if you're actually in fragmented work, part-time work, 0 hours contracts, and unfortunately, the statistics are pretty shocking. More than 60% of those people employed these days are in the latter category. So they're not actually in the standard type of employment with all the bells and all the whistles. What they are effectively are, caught up in this fragmented work environment that we've now got, where, of course, wages are being driven down. People have to chase their own tail just to try and generate enough income to be able to survive. And then, of course, that puts them more at risk with regard to, the bug and everything else. So I would put them on the loser side as well.
Right. Now, well, it makes sense. Look, they're just the things, the four main things that we come to mind as we were preparing for today. But there's obviously going to be a lot more, and our viewers can no doubt will be sharing a lot more of what they see out there in their side of business and in their life and in the States.
And I guess that takes us to the tip of the week. Well, actually, tips of the week.
Yeah, look, the tips of the week are basically really in line with what we've been talking about, and that is just the first one is just, look, don't be too eager to jump into the market. Not now, particularly if you're looking at apartments. Given the information that we've shared, and the numbers that are still on market, and the way that the apartment numbers are tracking up in different parts of Sydney, they're coming on. That there are a lot stronger than the freestanding homes. So I would be very cautious to jump into the apartment arena at the moment. But and in some areas, you're going to be still, some agents are still going to be asking or demanding the high values that they were achieving in the last quarter of last year, but more to the point, because of the new information that we've just got from our WeeChat chatters in in mainland China. The second one is with homes, in terms of with freestanding homes. Look, again, it's one of these move forward cautiously. It's still early days in terms of the new calendar year, the new property year as well. Numbers aren't coming on market as strongly, but they are still coming on market, and there's a lot more that got taken off market last year. They're yet to come on, and that'll be the nature of it. So just wait. I would be waiting more towards the end of January. But if some properties do come up and you are interested in them, look, in terms of homes, I suggest stay very close to the real estate agent, the selling agent, and start talking and start at the price that you would like to buy. Before there's the price that you would like to buy at, and there's the price that you would be happy to walk away if you didn't purchase the property. So there's the two distinct prices. Now I've submitted an offer to an agent today at the price that I would love to buy it at for our clients. And obviously there's going to be a bit of to and fro, and I've thrown in my 2 cents worth as to why the agent, what the agent should be telling the vendor as to why we should be getting it at that price. But that's the price, the ideal price that we'd like to buy at. Now there's a bit of wiggle room to go up, and there is also a price that we would walk away from the deal if the vendors aren't are not going to come to the party, and we're just simply going to move on. And that's how you got to approach it, because it's still early days, as we say, and we just got to keep an eye on those numbers.
Absolutely, yeah. Brendan, I'll just make one other point. I've been focusing on asbestos through the asbestos awareness program, which is now beginning to ramp up. I had some further feedback from a follower today who got an inspection of their rental property, discovered they had asbestos in the basement and also potentially elsewhere too, and they've now realised just how complicated it is, because the inspector who actually gave them the report, if they read the small print, they basically said, well, we may not have found it all. So no. even if you get inspections, you can't necessarily put any weight on the inspection that's actually carried out. There is the risk of more asbestos elsewhere. And one of the things that this particular person said, it's very, very hard to spot asbestos. So that takes me to a bit of a challenge for you, Edwin, but also more broadly to our viewers. I want to start collecting pictures of asbestos. Right?
Oh, continue. Keep some.
Yeah, exactly right. So next time you go on your hunts through property, folks, and you see asbestos, or if you see asbestos anywhere, I want a photograph or I want a video, right? Because it seems to me that the only way we can help people recognise the sorts of places that asbestos may be living in is to show them real pictures. So that my tip is, don't just assume that it's a flat sheet, somewhere. There's lots of other types of things that asbestos can be, and unfortunately, it can still kill.
Yeah, look, Matt, this is one of the things that you pointed out, and the inspector pointed out to you, to that individual, and that is that it's very difficult to see and very difficult to determine. Now, the property that one of the properties that that from in the mountains that we're renovating on the land, I took 7 samples from inside the main house, so that I can be clear, so that I can be comfortable, assisting the team to help me renovate the property, and also not to put our extended teams at danger as well. And so just because you've got, you might get a clearance in one area, doesn't mean that fibre is throw, unless you really you do an intrusive test and you send it away to a lab, you're not going to really know. So I took samples of of certain ceilings. If it was the same product, if I was 100% confident that it was the same material used in the other room as it was in one, I obviously didn't double up on the on getting the samples. But this is one 3-bedroom house. I took 7 samples.
Yep.
And I sent them away to get them lab tested. Now, some may think, what'd you do that for? Blah blah blah. That's a lot of money. At $75 a test, it's cheap in comparison to the costs on the other side, and not only to my health, not only to Dusty's health or Evan's health, but also to the tradespeople that are that normally get exposed, because a lot of them just want to do the work. Unfortunately, they just want to do the work and that didn't do this. So I totally agree with you, Martin. It's very difficult to note, and unless you know what you're looking for, it's very, 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 very hard. One of the best things that our followers and our viewers can look at is get an idea of the style of home, or get an idea, or ask the agent, or if you can get some information as to when the property was built. If it was generally built before 1986, you can be assured that there's asbestos in the property, unless it's a double brick home.
Absolutely. Well, if people want to find out more about asbestos, go to asbestos awareness australia.com.au. There's a lot of information there, and we'll be putting more information up, because this is a real killer, and unfortunately you can't rely on government, you can't rely on the state or industry regulators to sort this out. Anybody who's touching property, considering touching property, you should start from the assumption that there may be asbestos there and prove there's not, rather than the other way around, which is assuming it's fine until you trip over it, because it's too late by then. And then, of course, the other point, just to re-emphasise, the whole idea of you can encapsulate it and leave it and it'll be fine is completely rubbish, right? All the science now shows that even asbestos in situ rots, and essentially the fibres can break away, and you just need a few fibres, and then you actually have a horrendous potential risk later in life. So it isn't worth messing with. It really is important to really test it and make sure. And I think over time, Edwin, we should start to share a few more photos of what asbestos looks like, because that's going to be part of the education process.
Oh, look, definitely. And just in closing, Martin, I noted there that Dusty and Evan pledged $888 to the foundation. They're hoping that one of our followers, one of our viewers, can match that pledge, and it won't be the only pledge that they'll make this year. But notice it was 888. They feel lucky, and it's the year of the tiger. So these little tigers feel lucky for 2022. You'll be. They told me there'll be the checks in the mail.
Well, I want to thank them, and we have had a significant number of donations, large and small. You can find about that from the Asbestos Awareness Australia site. Every dollar that's received is going directly to the campaign to raise awareness, right? So you can be absolutely sure that the 888 is going directly to campaigns, and there'll be a lot more information sheets and other things too, because the conclusion we came to, having looked at this over the last 3.5 years, is that unless people are given more information, they're never going to recognise it. So that's what we're focusing on, Asbestos Awareness Australia. And so thank you, Edwin. Thanks for that. Thanks for your rant today. And we'll do it all again next week.
Definitely. And if we get another emergency, some info, some breaking news, we'll definitely share it once again with our viewers.
Absolutely. Always happy to do that. Thanks, Edwin. See you later. Cheers.